Eric, hello. So good to see you. I'm really glad you have time today because I really want to talk through the markets and geopolitics right now. As everybody knows, rising tensions in Iran have pushed oil prices higher and created short term volatility in the markets. Historically, however, geopolitical conflicts tend to have only a temporary impact on stocks. So as we take a look at the 3-month performance of the S&P right here, this is a chart from FinViz, which I love looking at. We do see a lot of green on the board, some red. It's been volatile, but why do we tend to see stocks fall first when tensions rise?
Yeah, so great to be here. Great to see you again. And
You too.
yeah, so I mean, it's simple but not simple. Most stocks, and particularly even with this most recent volatility and downturn with the war, you stocks have increased in value quite a bit. And so when they get the more expensive stocks get versus earnings, they start to get a little expensive and they tend to, that increases the risk. And so, stocks themselves are perceived as risk or high risk. So
Mhm.
whenever somebody wants to, or the market wants to take risk off the table, that's the first place they're going to jump to. They're going to reduce those stocks.
Mhm. Yeah, it's interesting to look at that. And then to see this kind of just from a different perspective, because I know you're a student of history, you love looking at these data points. History does show the S&P usually recovers quickly from geopolitical events. So as we take a look here, this shows several events and mostly short, shallow pullbacks. Can you just explain what we're looking at, please?
Yeah, this is a fantastic chart. If history is our teacher, we know that patience and not panicking is the key to success. And you can see here in this chart that even in the midst of these conflicts, the market, corrected less than 10%, which
Hmm.
is very resilient. And in fact, we can see from this chart that in each time that these events occurred, the market recovered in less than 100 days. And
Wow.
so you got to be patient and you got to take emotion off the table and just be really resilient and hang in there.
Yeah, it does help to look at those data points because I feel like when we live in the moment, it feels like there's no end. It feels very stressful. So it makes sense why investors become uneasy. But Eric, for investors who are watching the headlines and rising oil prices, what's the most important perspective we should all be keeping in mind before making any portfolio decisions?
Yeah, when we have volatility like this and we have, shocks to the system, it's the worst time to make knee-jerk reactions.
Yeah.
It's really about maintaining the course. And if you have a good, solid plan in place that can weather all storms, then you're fine. And quite frankly, here at Take Point Wealth, we have already positioned portfolios a year ago to, in a sense, be prepared for the volatility that we felt like we may experience in 2026. We didn't know the war was coming, but we did know that stocks were starting to get overvalued, and we did know
Mm.
volatility was starting to increase. And the story is the same with the the flow of money all going into technology and AI and all that. Stock started getting really expensive. So that's why having a tactical asset management strategy makes so much sense. You've got to have your money spread out and diversified amongst many sectors and markets,
Mhm.
and be able to make those kind of nimble little changes when you need to. But
Right.
having a portfolio that's already positioned to weather the storm is really what you need to have. And if you have a plan in place, you're less likely to panic, right? It's just like the war and going into battle. If you have a good plan in place, it's gonna alleviate that, oh my gosh, what do I do? That panic,
Right.
you know.
Right.
And quite frankly, here at Take Point Wealth, during this time frame, the phones haven't even rung. So we're excited about
Right.
that sense, but we know that and with the tools that we have with Brookstone Capital, it's just amazing. We have a
Mhm.
lot of great tools to buffer the downside and the volatility, and we've already positioned those in portfolios to weather the storm very nicely.
Hmm. You bring up so many good points, and I just kind of want to stay on one topic, which is emotional investing. You touched on it, right? Where if you don't have that financial plan in place, you are more likely to be led by how you feel in the moment. As you said, make knee-jerk decisions. This is known again as emotional investing. And Eric, can you just explain how this tends to lead to bad financial decisions?
Yeah, so emotions. Everybody everybody has different emotions when it comes to their money, but for the most part, folks uh, kind of run in, unfortunately, in herds, I call it. And so you'll see in this chart when we get to this euphoria stage, I mean, that's when people all of a sudden are like, hey, oh my gosh, I want to get in the stock market, or I want to take on more risk, or, you know, I feel like I'm being left behind because everybody's doing really well in the markets.
Right.
Well, that's really the worst time to be adding to stocks. We actually like to be able to rebalance portfolios when the market's down, because now we're taking advantage of repositioning and rebalancing the portfolio in down markets, which now when the
Hmm.
markets do recover, they're going to recover much quicker and better. So you got to be careful. There's a lot of different analogies and sayings out there, but when things are really getting high up there and everybody's feeling great, that's when people tend to take on more risk and get kind of led astray and don't have that diversified portfolio that's in line with their long-term goals and needs. So you just got to be
Hmm.
really careful with that.
Absolutely. And if you didn't make a plan yesterday, today is the best day to at least get that going. And Eric, you again made a lot of really great points. Proactive planning is key. So if somebody doesn't have that plan, or if they feel uneasy about these headlines, perhaps their plan isn't in line with their risk tolerance, what's the best way to reach you with any questions?
Yeah, so we tell people, there's several ways to get a hold of us. You can go to our website, takepointwealth.com, and in the upper right-hand corner, you can click on and get a consult or appointment right on our calendar. You can give us a call at our office at 352-616-0511, or you can just shoot me an email. Yeah, Eric at takepointwealth.com. So whatever's easiest for you. And we don't even have to get together in the office. We can do a Zoom and you
Yeah,
can be in the comfort of your home. But let's chat about what's going on and what you're seeing in your retirement plan.
so important. Eric, thank you so much for your time today. I appreciate it.
Thank you so much.